Well, the market's dumping. Why is the market dumping? We got the answer for you. It's because of this news out of Oracle, and it's absolutely bad. It is the second shot heard around the world for the AI play, which is basically the only thing that is propping up GDP right now. It's not great. I'm going to break down exactly what's going on and why it's the second shot heard around the world. Mind you, this is coming from a company named Oracle, which, in case you don't recall, Oracle is a person or thing regarded as an infallible authority or guide on something. Some would say like a seer or like somebody who can give divine or prophetic advice, basically suggest a prophecy of what's to come. There's another Oracle known as the Oracle of Omaha, who also tells us that the stock market is the most overvalued by 217% on the Buffett indicator that it has ever been in the history of market valuations. Mind you, that snapshot is from June 30th. And let's just say we're up from June 30th, so we're even more overvalued. All that notwithstanding, let's talk about the two shots across the bow and the shots heard around the world. So, first, we need to understand this fancy piece of crap document called an 8K. It's another word for a current report, okay? It's basically a company telling you, yo, we got some news, we're just going to drop this here, and boom, it's been disclosed to you. So it's just a way for companies to cover their legal basis for their disclosure requirements. All right, fine. So what's in this disclosure that's so fancy? Well, here you go, okay? Material Service Agreement. This, bottom line, we've talked about it before, so I'm going to give you a very quick reminder. This is a document that was filed about 30 days ago, like 28 days ago. 28 days ago, CoreWeave told us that CoreWeave is forcing NVIDIA to buy unused leases for CoreWeave data centers that are operated by or using NVIDIA chips. And the only way out of this is bankruptcy. So in other words, NVIDIA is going to pay. NVIDIA is going to pay to buy back unused capacity at CoreWeave data centers all the way until 2032, which is crazy. That's a long time. I immediately made a video on this. I go, this is a shot to AI. This is bad. The problem is a full copy of the Material Services Agreement will not be released until after the next earnings report, which we think will be November 12th, though some have been saying the 14th. So somewhere we'll know as we get closer, somewhere between November 12th and 14th. Mark your calendar for it. It is a big deal. Okay? Because when this came out, I made a video and said, hey, this is a really big red flag because it suggests that leasing out data centers has no pricing power. And I made it very clear that this is poopy doopy. And that we don't want poopy doopies, that we want frankly, okay, like as an owner of NVIDIA stock, I just want NVIDIA stock to go up, okay? Like that's that half of me that's like, please just make NVIDIA stock go up, okay? I like AI boom. The AI boom's great. It's supporting our GDP is fantastic. But that's not the analyst side. The analyst side says this is a big red flag to PP. It means that renting out data centers don't have pricing power. Now, what did we learn today? And why did the market tank today? Well, the market tanked today because Oracle, who's a heavily indebted company, just came out and gave us some numbers that suck. So, over the last 3 months, Oracle has generated $900 million in rentals of servers. Their executives told us that in the future, them renting servers to OpenAI would generate $381 billion of revenues. That's 105 times how much money they're making currently from the rentals of servers. So the executives are like, yeah, we're making $900 right now. That's actually going to be $381,000. Or we're making $900 per quarter, so that's like $3,600 per year. Yeah, that's actually gonna 100x in the future. Trust us, bro. Okay, well, great. So then, of course, Oracle skyrockets on the news, but now we're getting internal leaked information that while Oracle on that $900 million sees a $125 million like gross profit, which is about a 14% gross margin, Oracle actually lost $100 million renting out Blackwell chips, which are supposed to be the latest and greatest chips from NVIDIA, which supposedly have all of this insane demand. Now, maybe for a cash-rich company, that's not that big of a deal. It would just be considered the cost of doing business. But then when we actually look at the balance sheet for Oracle, we start getting a little bit concerned. And I've warned about this on the channel before, that Oracle is one of the highly indebted ones. And I've actually applauded Amazon for not being as highly indebted as Oracle. And this is, what's leading the market to tank today, right? The problem is Amazon literally today said they are opening new lines of credit with banks to finance more AI investment. I'm like, not them as well. Okay. Anyway, so everybody's taking on debt, but I want you to look at this balance sheet and tell me what this balance sheet looks like to you. Tell me if this is good. They have $19 billion to pay bills. So imagine you had $19 in your bank account, and then you had $27 of bills to pay this year. Well, in the next 12 months. That means you're upside down already. Okay, they've got $27 billion in bills to pay. They've got $19 billion in cash and receivables, assuming they actually get all these receivables. Keep in mind in their current liabilities, I'm excluding deferred revenues that they've already counted. Now, on top of that, they have about $100 billion of debt, not including their leases. So they're already heavily in debt. On top of that, when you look at their cash flow statement, yes, they currently have cash flow from operating activities, but they're spending more than all of it. If you look at their free cash flow by taking this number and then subtracting their capex, they're actually negative $400 million in 3 months on free cash flow. So we're negative free cash flow. How are we coming up with that money? We're taking on $800 million more financing in just 3 months. We're issuing $1.1 billion of stock, so they're diluting their investors. And they're using some of it to pay dividends and the rest to finance their negative free cash flow because they're so in debt. So this is not like a very financially sound company, even though it's massive, which is kind of scary. It almost gets to like too big to fail levels. So then you look at their margins. Their margins have collapsed 240 basis points from last year. Last year, they net about $2.9 billion, which what you'll notice is exactly the same as what they net this year. See? 2.9 billion, 2.9 billion, right? But wait a minute, what was the revenue? Oh my gosh. Last year was 13.3 billion. Now it's 14.9. And they net the same. So their revenue blew up, but they net the same. That's because margin's collapsing. Okay, why is margin collapsing? So they can't make money on these damn data centers, which is bad. Because remember the circular arrangement we talked about yesterday? Let me show you a picture of the circular scam. Oh, sorry. I actually meant to pull up my iPad to remind you all of the circular nature of the relationship that we talked about yesterday, which is only amplified, mind you, by the amount of deals that OpenAI is doing. Look at this chart from the information, just to understand how critical OpenAI here is. OpenAI has a deal with SoftBank, has a deal with Oracle, who have deals with NVIDIA, and OpenAI also has a deal with NVIDIA. NVIDIA has deals with CoreWeave. CoreWeave has deals with NVIDIA, mind you, to lease back unused chip capacity. You've got deals with Microsoft, who has deals with CoreWeave, and OpenAI also has deals with Microsoft. OpenAI has chip deals with Broadcom to make a custom chip. OpenAI has deals with Google. Google has deals with Anthropic. Google has deals with Meta. Amazon with Anthropic. And of course, OpenAI with Amazon. And I don't know what's missing here. Thanks, Financial Times. Sandbagging me here. But anyway, the point is, all of this is fuel to the fire that Oracle is now losing money on these rentals. When we look at this, which is like this disastrous circle. But understand, I'm going to simplify this, okay? NVIDIA invests $1 billion for every gigawatt deployed into OpenAI. So OpenAI gets money when they deploy a gigawatt, okay? In the second half of next year, OpenAI is going to have their first gigawatt deployed, which is when NVIDIA is going to give OpenAI $10 billion. So in the second half of next year, NVIDIA gives OpenAI $10 billion. After they get that $10 billion, in the second half, AMD says they're going to begin their data center deployments with the money that OpenAI has to spend on AMD chips. And then, of course, AMD will get revenues, which will lead AMD stock to go up, which OpenAI owns shares of, warrants of. And NVIDIA benefits from the value of OpenAI going up because it gives OpenAI more capital to spend money on NVIDIA chips as well. It's insane. Okay, that's just a reminder from yesterday. Add that to the news that we got today from the information. It's not good. So understand that Oracle is now seeing losses of $100 million from renting Blackwell chips. That's crazy. There's also no standard on the depreciation for these products, which is also not good. Understand that depreciation, and I've made videos on this, is fantastic to add back in when prices are going up. But these are depreciating assets. Chips are going to go down in value over time. Over the long term, a chip goes to zero. Like, I just want to make this like critically clear, okay? Anything like a chip, a car, right? These things go to zero over time. So let's write that down here. Let's write down chips, AI, or I shouldn't say AI, cars, planes, boats, butter, for those of you who are course members and understand what that is, all of this trends down to zero over time. It always goes to zero. That's what history tells us. Okay, there's no debating that. These things go to zero, and so you depreciate them to take them to zero. Of course, then people add back in depreciation, but they're like, oh, well, it's getting value. The only place it makes sense to add back in depreciation is real estate, because houses over time are an inflation hedge that go up in value, right? They hedge inflation. They remove you from the dollar, right? So housing, it makes sense to add back depreciation because it goes up over the long term. Everybody over here adding back in depreciation for a depreciating asset is losing their mind. And there is no standard definition of what's going on with depreciation at these companies. Now, why is that a problem? Well, because Oracle themselves, via this leaked information on depreciation, let me show you. Take a look at this. Here we go. 14% gross margin, which is them just taking the 120 million of gross profit divided by 900, figures about a 14% gross margin, which, mind you, is lower than Oracle's net right now, right? Oracle's net margins, the more AI data centers they do, the more their net margins are going down. Their net margin right now is 19.6%, right? Their gross margin on AI chips is 14%, but that doesn't include potentially another 7% of depreciation that they could include. But there's no standard definition on how people calculate this. So it's crazy. These are apparently internal documents from Oracle. And so it's all a fugazi bullshit. Like, let me, sorry, I shouldn't say bad words, but, and mind you, like, I'm losing money right now, okay? Like, this sucks, dude. What is, like, you see this? You see NVIDIA down 50 basis points? Bro, that's costing me money by the second. Film it, like, honestly, we were filming, like, looking at this information, like, right here on the live stream. And I'm like, oh, this is really bad for NVIDIA. Like, I just sold right here. I just lost another $3 per share at, over 13,000 shares or whatever I got. So, like, damn me. but I must make this video. It's okay. It's okay. So, like, I want to shill AI, but my nature is I gotta tell the world what I'm seeing, and when I see bull crap, I'm gonna talk about the bull crap. And so here's the thing, okay? You have to understand that these companies' earnings are fugazed. Okay, here's how I'm gonna show you the fugaze, how it works. Okay, watch this. Watch this. So I'm gonna go pretend I'm Microsoft. Let's say. Okay. This is fake, don't sue me, bro, example given. Okay? Do people understand what EG is? It stands for example given. Okay? If you just learned something, hit subscribe. Oh my gosh. Dude, I need Alamo coffee for this. Remember the Alamo. All right, this is important. So, fake numbers. Don't sue me, bro, Microsoft. So, hey guys, we just spent $10 billion on NVIDIA chips and our data center build out. Yeah. Oh, guys, we just made I don't know, let's go with we just made, how do we want to put it? Let's just say, I don't know, let's just say they made $2 billion. We just made $2 billion in revenue, you know, recurring revenue or whatever, right? Well, technically, you know, you and I on a cash basis, we're like, all right, so you just spent $10 billion on chips to make $2 billion. You just lost negative $8 billion, right? But that's not how it works. Because these companies say, well, these $10 billion of chips, we're actually going to depreciate them over 7 years. So we're only going to expense these to the tune of $1.4 billion. So actually, guys, we didn't just lose $8 billion on a depreciating asset that Oracle can't even rent out for a profit. We actually made $540 million because we're top G's, bro. So you literally have these companies today, literally, Microsoft, they're all doing it. Microsoft, Meta, Amazon. Dude, our entire GDP is like based on these knuckleheads right now. And these are like toothpick foundations, okay? They're going, guys, we just spent all this money on stuff that's going to lose value. It's going to go to zero. But don't worry, my accounting, we're so, like I said, like when I see stuff like this, to win big deals with AI customers, Oracle and other cloud providers are offering heavy discounts on GPU prices. And Azure is seeing margin pressures at Microsoft because companies have to price so aggressively. And on top of that, when I see utilization is trash, where was it? Utilization of Oracle's GPU servers range between 60 and 90%. That's bad. That's bad. Like, understand this, okay? Howard is at 100% occupancy. Our tenants pay rent. And I get pissed when properties are vacant. Obviously, when we're renovating properties, they're vacant. And the goal is rent them out as soon as possible. Now, most apartment buildings operate at like 92 to 94% occupancy. So you have a vacancy factor you include it. Okay. That's like apartment building world, 92, 94%. You know, we're at 100% on our apartment buildings. But the utilization for these chips, which can run 24/7 and aren't reliant on people, is between 60 and 90%. So take the midpoint, 75%. That's horrible. I mean, it's 25% of the time, all these data centers that you currently have, on average, are doing nothing. Which is really interesting because if 25% of the time, the data centers you currently have are doing nothing, why are we building so many more? And this is where the problem comes. Because if all of a sudden we're like, you know what? We don't need to build anymore. Here's how it all collapses. It's like we're writing the 2026 textbook on the collapse. Here's how it works. NVIDIA invests $10 billion into OpenAI for every gigawatt deployed. Oh, but wait a minute. What happens for a moment? What happens if we don't get that gigawatt deployed? Oh, no. No deployment? Oh, crap. Okay. Well, wait a minute. Then that means OpenAI won't get their $10 billion from NVIDIA. Gone. Which, wait a minute. That means OpenAI doesn't have the money to invest in AMD to begin the AMD build out. Oh, crap. Which means AMD doesn't get the money. Which means NVIDIA doesn't get the revenue. Which means NVIDIA, oh crap, can't invest anymore. Which means that OpenAI stock or that AMD stock isn't going to go up. Which means OpenAI doesn't have more money. Which means no more NVIDIA. Oh crap, I'm left with a shell.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.